21st, and it is my last day in the office for 2 weeks. 2 weeks from now, on July 5th, I will be back. So since I will be away, I will not be doing the videos. Doc will be doing videos next week, then he'll be gone the following week. But I have a gentleman by the name of Craig Hill. He will be filling in for me each day. Craig's been a student of mine for almost 6 years now. He's the lead moderator of the live E-Mini trading room, and he really is my right-hand man here at Trading Concepts. He's the one who puts together all of my PowerPoint presentations and just really helps me in creating the programs that I've created. And again, he is the lead moderator of the trading room, so he will be taking over and doing about a 3 to 5 minute video as I do each day. Although my videos I know are longer, I'm a little long-winded, and for those of you that don't have the patience, I apologize. It's just me. That's the way I teach, and so I just want to throw that out to you and let you be aware of what's going on. So Craig Hill will be with you Monday, June 24th for his first day, show you some of the things that he knows about the market and just give you some tips and tricks. And I don't think he'll be pointing out trades like I do, but he will be showing you some things that I think you will find very valuable. So first chart I'm looking at is the US dollar Japanese yen forex currency pair. If you recall, we went long right here as I'm drawing this arrow. Remember, we went long at 95. Here, let me outline this for you. We're pretty much out of this trade now because the second the trailing stop was hit yesterday. So we went long. If you recall, we called that out as it happened. We went long at 95.24. Okay, as it broke up through the high of this inside vertical bar. Okay, our initial stop loss was right down in here. We were risking initially. We were initially risking 119 pips. That was our initial risk. Our first profit objective, was 97.45. Not bad, right? And that was hit. That was hit on the second day, right? First day, second day, boom. Okay, now, so on this trade, we made 221 pips. Not bad. Our second profit objective was at, let's see, 98.65 right here. 98.65. Just missed it by about 30 pips right here. Just missed it. So what we did was we brought up the stops up. We brought the stop up to, let's see, my notes here. Where did we get at? We went, let's see, 97.24. 97.24 is where we trailed it, because when we placed that, when we moved that stop up, the market was trading above 98. So we gave it about 80 pip rooms. We gave it about 80 some pips, some room, okay, on this trailing stop. So P2, okay, we made 200 pips. So that was a good trade. All right, so total, we made 441 pips between it. Well, again, we split it. We did half, took half the position off there and half there. All right, so again, that was a good trade. So let's take a look at this real closely again. It's a trade that I point out quite often, actually, so you should really know it by now. Essentially, this market has been roaring. It's been a real strong trend. We've had multiple good entries in here, if you recall. Okay. What we did was we measured the fibs from this high up in here. Let's see. I gotta take this off and crunch this down a little bit. We measured from down in here, the low of the green bars right here, to the top right here. And look at this. 38.2% retracement was right here. Right, we had a double inside bar. Inside, 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 inside. 2 consecutive inside bars. Once it took out that second high, we went long, and it was a good trade. So that is the reason. Pretty simple. Even though we were breaking down through the 50 exponential moving average, I thought we'd get a good pop here. Let's quickly visit our TBT trade. As you recall, we are long, or I am long. Who's we? I don't know. It's me. I went long this market is it took out the yearly high here. I wanted to be in a little bit. Again, this is an interest rate play, okay? If you think interest rates are going to stay next to zero forever, then this isn't for you. So I went long as it took out this high, just a little bit though. But then when the market pulled back hard on that one day, you know, my average price on this, let me give you my exact entry on this trade. So a little bit here and a lot more down in here brought my average price actually smack dab between the mid to the lower band at 66.91. I'm actually long at 66.91. That is my average price. Right now we're trading at 72.80. And right now my trailing stop on this to lock in something is going to be slightly below the yearly high of 69.64. I'm going to 69.45. 69.45. So I'm locking in about, I would just do the math. Look at, we're long at 66.91, and now my sell stop, right, is at 69.45. Again, I'm going to be gone on vacation for 2 full weeks, so I'm going to have a resting stop in and just let it go. And if I'm knocked out, I'm knocked out, and I'll look to re-enter this market. Since it is a longer-term play, I'm still looking to take profits off the table when I have them. And I'm looking to manage this trade as I do on every single trade I do. Okay, I just don't buy and go away, or sell and do nothing. I'm managing the trade. Part of successful trading is being able to manage that trade once you are in. So again, average price on this trade is 66.91. My trailing stop is just below this high, so the market's got to come back down. It's at 69.45. I'm locking in $2.54 on this trade. All right, now let's just go to the general market. Let's go to the E-Mini S&P 500 now, okay? Now, you know the way I play this in the retirement account is trade the ETFs, right? I like the SSO, and the reverse is the SDS. It's 2 times the fund, the general market, right? So this is what we have. We're starting to break down. Yesterday, we had a big sell-off down about 354 points. We took out this low. All right, we took that low out, and we are clearly, look at yesterday, because we got the gap, right? We got the gap to the downside, and so far, obviously today we have an inside pattern, right? The high is nowhere near yesterday's high, and the low is still higher than yesterday's low, but it's still early in the morning. The market's only been open for an hour, so this market could still sell off big time. But what I want to point out to you is if the market is not able to take out yesterday's low or high, if I were here trading, I would be looking to buy the market as it takes out today's high if today is an inside pattern. So that is a potential play for Monday. Again, I am going to be gone for the next 2 weeks. So this is what I'm looking at. Let's look at the bigger fibs here. Let's measure from this low up to the all-time high there. We've already got the fibs from this low to high. Let's measure one more set. Okay, let's take it from this low to high and look to see how much confluence we have. Now let's look at this a little closer, and then I'll end it. Again, it's a little over 8 minutes, and I know I always go long, but one set of confluence was the 50% and 38%. Right, you see that? Real close, right there. And if you look back, look at the bounces we got at those levels. Okay, when the market made the high, remember it was measured from this low to high, right? And from this low to high, right? Look at this level. The first time it hit that confluence level, we bounced significantly, right? We bounced up to here, then we came down. Look at that, came back in confluence again, bounced up a little bit higher, and now we're through it. So this confluence, right? Remember, retracement confluence is simply when you have 2 or more areas that are in conjunction with one another, right? 2 sets of fibs. So from this low to this high, you've got the 50% retracement. From this low to high, you got the 38.2%, which is sitting on each other. So that acted as confluence, twice bounced. Now we've broken through it. Now look at where we're at. We're at the 61.8% retracement from this low to high, and the 50% from this low to high right in here. We've got confluence here, right? So our first set of confluence was here. It did what was expected. It bounced twice. Right here, came down, bounced again. Now we've broken down through that level. Now we're at a second confluence level here. Our third confluence level, with all of this, even from this lowest low, right? We've got the 61.8 from this low to high and the 38.2 from lowest low to this high. So we've got a third set of confluence right in here. Okay, so it'll be interesting to see if the market can hold in this level. I would not be an automatic buyer. I would want to see a price pattern forming in and around this level before buying. The reason, again, for that is because the market is clearly trading down through the 50 exponential moving average. So I want to be a little bit more cautious, okay? But we are right now, right here at 1581.25, sitting at a confluence line, right, numbers. And that, let's run it a little long. Again, that is between 1585 even and 1574 confluence. Again, the only time you would want to initiate a long trade in here is if we do get some type of pattern. So even if we trade down in here and we create an inside or a bullish outside, I'd be looking to go long that market. And then same to this area. So again, hope everybody does well in the next couple weeks. And again, I will be gone. Craig Hill will be filling in for me. So until July 5th, have a great 2 weeks. Bye for now.